Hi, good evening. So, in the stock market, there is always two side. Understand this? Two side in the sense the market either will go up from its current market price, or the market will go down from the current market price. Now, uh, let me just give you some recap of my analysis first. First recap is at the time of the 15,183.4, whenever the market made the bottom. Uh, at this particular point, we estimated that this is not the bottom of the market. Okay. Now, the market, the market could be predict according to two criteria. The first criteria would be the technical. The second criteria will be the data or the number, or in the very basic term it called the fundamental. So according to the fundamental or the data point of view, the market is not made the bottom at this point. That means according to the data, the market should fall more. Now there is the second thing which come into the market, and the thing will be called the technical, in which if you want to understand the same thing on the very easy point of view, that is if you have like position in the market in the stock, and the market capitalization of the stock is like 100 crores. So if you have a capital of 10 crores or the 20 crores or the 50 crores, if you continuously buying the company stock, the company will be go further up. Uh, Whatever the fundamental is, it will not affect anyhow. So the currently the market is pumping according to the price point of view. So the market is going on the upward side. So this is a very different thing, because in this way, in this market pumping area, if you remember, we predicted few stocks move, and those stocks already achieved their respective targets. Now question is, in this continuous rise of this market, did we able to take the trade at the bottom or somewhere here, and can we make some money in this move? So answer is definitely yes. Just give you a very basic example of this. If you open this low to high, also if you draw the Fibonacci from this low to high and open the 1.272% of the retracement, whatever you will find, this is a solid, uh, I mean, very solid support according to the 1.272 and the 1.618, and this one. So if you see, there is market created a divergence pattern at this particular point, following by this method of the inside bar. So technically the market got a bullish entry at this particular point. So if you want to take the entry, you can take. Now question is how fast. Now fastest move is there in the market, and the market moved within very small period of time for about a move of almost 2000 points. So this is one way to predict the market. But this prediction, you have to understand one thing. This is all about the technical. Now data is telling you the different story. If you know how the data should be read and data should be um, check and all of this, in that way you will find a good opportunity of the selling in the upcoming days. All right. Now the question is, shall you buy the market or shall you sell the market? So I will always prefer for the retail traders, because we have the limited source of money. You always need to do positional trade with the option writing, with the proper hedging. And also, if you want to take the trade more riskier, in that case, you always need to find out one more thing, that whatever money you are putting in the market, you have to have um, cover at least some point of hedge. In that way, you can save your money by 70 to 80%. Now, whatever all of this in between this area, we are able to predict some of the smaller move of 500, 700 points. 1 second. Uh, Sorry, I had to take one call. Now what I want to discuss with you, that whatever the market is showing in this picture right now, don't put your money without define the risk. That is my one and only point according to this. Now, if you see the standard market structure, whatever I was trying to tell you from the past few days or months, this is the standard market structure of current. Okay, this is the market structure. Now, currently the market changed its wave like this. Okay, it filled all gap. Now, according to the current market structure, these two waves got merged, and market is next top. Whatever the market is trying to do, or whatever the market is trying to tell you, that in between this range we will able to find the market top. Okay. Now, as we are currently above the 0.618 range, the next point is there at the 17,489. Now, currently, I will not surprise when the market, because there is all 4 gaps is pending on the downward side, and one gap is pending on the upward side. So this is the market gap is right now. Okay. Now the question is, the important question, how to trade the market according to the current direction. Intraday trading is not a difficult job, because here you are not risking your money blindly. Okay. Now the question is for the positioner. Positionally, I will never ever suggest to take the option trade blindly or the naked option buying. Nowadays, due to the introduction of the mandatory hedge, or the hedge benefit, or the margin benefit, you will not able to take the trade based on the naked option selling. By the way, if you have the margin, you can take the trade, but it is not either advisable or neither benefited much more. Okay, so you can always take the trade above the 17,500 call option for the writing, and below that, like 16,000, sorry, 16,900 put option for the writing. So these two you can write for the weekly basis, or even you can try with the monthly basis, because I am expecting the higher volatility will be hit the market in the upcoming days. Volatility sense, not one-sided move, but the both-sided move is possible in the market. Because see, market will always surprise what you are going to think, but end of the day, it will give you the move whatever you expected a few times back. Okay, so that's all of the things I need to discuss with you. This is not a hugely technical, but this is a kind of advisable analysis according to my end, from my end. Okay. So that's it as of now, and I will see you in my next.